GDP, this is the final read on the first quarter, coming in a bit lighter than that second read, coming in at 2%. And the core PCE quarter-on-quarter index bang in line with where we were at 2.3%. And personal consumption, I should also point out, David, a little under 1%.
Just a little lighter than what was expected. Okay, I want to return now to Nathan Sheets of PGIM Fixed Income here in New York. But also with us over from London is Gina Martin-Adams. She's Bloomberg Intelligence's Chief Equity Strategist. So you can talk about the specific numbers, but more broadly, where are we with the U.S. economy right now, Nathan? The
U.S. economy is looking very, very solid. Probably strong would be a better word. 2% growth for the first quarter is okay, but the trackers for the second quarter is suggesting GDP growth of 3 to 4%, very strong, and that's likely to continue through the end of the year. The consumer is strong, business investment is doing well. We're supported by fiscal stimulus that's significant.
Well, exactly, Gina. I want to turn to you here because we heard actually from Secretary Mnuchin yesterday. He's expecting second quarter. These are first quarter numbers. Second quarter GDP numbers will be very strong. But if you take $1.5 trillion and pump it in the economy, shouldn't you expect this?
Yeah, you would think so. I mean, I think that what we had is a pretty good fiscal boost on top of what was already going to be a boost to economic growth. Flashback to a year ago. And even without the fiscal boost, we had pretty strong leading indicators of growth with the ISM surveys, the business surveys, the consumer surveys all reaching all-time highs within the last year or so. So there was a leading indication that we were going to get much stronger growth in 2018 than we had in 2017. And now we're starting to see that come to fruition with second quarter growth estimates getting boosted by economists. And the expectation is that that stronger growth is going to endure into the second half of the year.
And I do want to just dig a little deeper into some of the numbers here. So the reason why growth was downgraded for the second quarter was revisions to spending, first quarter was revisions to spending on services and for inventory investment. So that was just an interesting little tidbit there. It's consumer spending that rose just 0.9% versus that estimates. Inventories and net exports also subtracted from GDP.